Hi, and welcome to another episode. This has been an interesting earnings week. You might hear that I had a sort of a cold. The whole family here has been struck by the flu, so that is why this video might be a day late or so, but I think it's still important to make a summary of the earnings lately to provide you with up-to-date information because, as you know, Wall Street never sleeps, money never sleeps. So even if I have a flu, we still have to provide content to having like information up to date so you can make swift decisions that can make you happier, more rich, etc. So that is what we want. I will start to go through some of the biggest companies' earnings, and I will comment, and we will hopefully find some clues about the future and if we should like keep our money in the market, if we should pull back, should we invest more, etc. So yeah. So I'm going to use ChatGPT here to have some good information. Okay, so we start with Tesla, and the company reported net income of $2.6 billion. We should know that a portion of that is actually Bitcoin. So keep that in mind. It's a bit boosted, the earnings there. It was actually below expectations of $0.77 per share. So this won't provide Tesla with a very large PE ratio this year. So you won't being able to use the common metrics when you analyze Tesla as something you should invest in. You have to look further into the future and listen to the earnings call and see what are told like behind the obvious numbers. So basically we can see the profit has really declined. The revenue has stayed flat, decrease in electric vehicle sales. So a lot of bad metrics, but the energy generation at least is growing a lot. Quite impressive. But we can say that in the USA at the moment, maybe not the biggest focus is not on renewable energy. So that could pose some problems for Tesla. Here we can see that some more information that the stock rose 5.5% afterwards, but later declined. And I would say, as a shareholder, I don't have a large position in Tesla, but a small one. It wasn't the best of earnings, and it did not provide me with like the feeling of going in with more money, but I won't sell based on the news. We still have like some drivers in the future, some KPIs that can provide a big boost for Tesla. They're talking about the new Tesla robot, maybe hyping up too much. Obviously, those kind of things are very expensive to create, and it will take a lot of time before making such an investment profitable. We have the robotaxi network. They are trying to get approvals in Austin, in Texas. Once again, it's Texas. It's always Texas nowadays. It's very low taxes, and the politicians over there are doing everything to make the richest persons happy. So a lot of rich persons are moving to Texas, actually. The problem with the regulation for Tesla in comparison with, for example, Waymo is they don't have like the LiDAR technology. With Tesla, it is just the cameras. So when it's very dark and very rainy, it can pose some risks. So that is why they have not been able to have the green light yet. But I think Elon Musk are cozying up next to Trump to maybe get some deregulations and to get the robotaxi network going faster. So yeah, this is the stock price at the moment. So just keep your Tesla shares if you're a shareholder, but I would keep analyzing to see if they can really meet what they are telling they are gonna do. Sometimes Tesla are saying that things will be delivered faster than they are. So we are still haven't seen a lot of Cybertrucks on the roads, etc. And the Tesla robots is probably far away, and the robotaxi network isn't here yet. So, but it's an interesting pick long term. So yeah. Next is Microsoft. Not just Microsoft. Microsoft latest earnings. Okay. Also an interesting company, very big, and they increased 12% year over year, and a net income of, and the revenue was $69.6 billion dollars, and the net income was $24.1 billion, up 10% from the same period last year. So that's amazing numbers. The earnings per share was $3.23 and surpassing the analyst expectations of 3.15. So they beat expectations. Obviously I have Microsoft as one of my bigger holdings, so I'm very pleased with the earnings. Still, we did see the stock react a bit negative in the marketplace. I think it should not have been, but obviously Wall Street can turn anything short term as they wish, just to move the stock. But long term, it was very pleasing to see Microsoft once again providing a solid growth both in EPS and in revenue, and they do that despite investing a lot. So yeah, that's great. The Intelligent Cloud segment, which includes Azure and other cloud services, generated $25.5 billion revenue, representing a 31% growth year over year. Notably, Microsoft AI business achieved an annual revenue run of $13 billion. So that's amazing. We can see that really that the Intelligent Cloud segment are going hard, and this is why they are investing like $80 billion in 2025 to just keep growing that business, the Intelligent Cloud segment. Still, they have some problems with the gaming division. We know that Xbox hasn't really sold anything lately, and I really hope that they will, in a couple of years, provide us with another great Xbox experience. I had the Xbox 360, so back in the days I was an Xbox player. Before that, maybe I had PlayStation 1 and 2, so they had me for a while, Microsoft, so I hope they can come back and provide some solid, great gaming consoles, so we can have the console war again between PlayStation and Xbox. That would be amazing. So hopefully they have something up their sleeve there that can boost it overall. We were told that the slide in the market, a couple of percent after the earnings, was based on like the Azure cloud slowing down a bit, but I would say that's like nothing to worry about. So overall, solid earnings for Microsoft. I think the stock is actually not too expensive in terms of the metrics, the PE ratios, the revenue, and the earnings, and they have this wonderful way of growing every year. We should know that they are going to invest a lot of money going into 2025, so that might affect the earnings per share a little bit for the next year, but hopefully that's in the longer term can help them gain even more market share. So yeah. Here you see also the commitment to AI innovation, 80 billion. Yeah. So that's great. We're also gonna read a bit into Apple's earnings. Apple, a beast. So that's always a market mover in the big indexes, and you just have to see what they are up to. Okay. first quarter of 2025 for Apple, a 4% increase from the same quarter previous year. And they increased both earnings and per share from 2.4 to 2.4 in this, and the net income is 36.33 billion in comparison with the 33.92 billion in comparison with the former year. So key financials is decent, but you can see that the iPhone revenue is slightly down. The Mac revenue is slightly up. iPad revenue is gaining some momentum again, and wearables about the same. But like the previous years, the service revenue has been the one place where Apple has been interesting, where they have a lot of margins. But we know that they are under attack from companies like Epic Gaming and Spotify, etc. So basically, the service revenue can be affected long term, but they are having really great lawyers, etc. So probably Apple will keep gaining more revenues and better earnings per share over time, which is making it a safe stock. They are paying a lot of dividends, etc. But as you can see, they are really having that pricing power on their products, their phones, their services, which making them grow bigger. It's not volumes anymore. It's just about having price increases. So that's a bit harsh. So yeah, keep that in mind, that maybe you can't keep raising prices forever, even though iPhone is really something that people use every day, all the time. At some moment, they will have a hard time to just keep the stock interesting without having some more innovations. We know that the intelligence AI are coming to iPhones, and Tim Cook was saying that the iPhones which have the new updates with intelligence are selling better. So maybe that could be a driver for a couple of years. But for me, I'm not a shareholder in Apple because I feel like it's a bit of a premium because their name is Apple. The earnings has been like this since 2018, 2019. Is a lot of improving the margins, increasing prices, not increasing volumes very much, etc. So in the end of the day, making money is maybe the most important, and Apple stock has been doing the shareholders great. But we do know that Berkshire Hathaway has sold out from their position, so maybe they know something also about the market. We know that they have a lot of business with the car BYD in China, so they might understand the Chinese market also and what is happening over there. So we should keep cautious about Apple, I would say. But obviously, if you are an Apple shareholder and you know what you're doing, don't sell out from this classic stock. But be aware that this company is slowing down a bit, like IBM did back in the days. So here you say they're really talking about Apple Intelligence futures that are supposedly being something interesting for the shareholders for the future. I also know they have investing a lot in this VR goggles. So for Apple, we hope that that will really grow bigger. But we have seen Meta doing the VR thing for a while, and it's not easy to earn a lot of money using the VR sets. So I think that's probably a while before that can, in any substantial way, affect the earnings per share. So that's my take on Apple at the moment. I can also say that Meta had earnings, and they had great earnings based on revenue and also earnings per share. So the stock price was rewarded by Wall Street based on that. Still, Meta are going to make massive investments during 2025. So I would still be careful just to pump too much money into Meta, because the share price is already gained a lot lately, and they are going to get worse earnings per share during the next year. But still a very interesting stock. They are gaining momentum in the AI space with their OpenAI not OpenAI, but their AI models that are free to use. I think it's called Lambda, something like that, Lambda models. So Meta is also an interesting company with great earnings this week. So overall, I would say that this earnings week proves that you should have your money in the market long term. The companies are still having very easy time to improve their margins, the earnings capabilities in the market. And I think based on the AI advancement in terms of what AI can do in comparison with people, and also how it can improve the personnel at the companies, making them more effective and better. This will probably be a driver for at least 10 to 15 years. So the big companies here will continue the momentum into the future. So based on that, I would not miss out on having your money in the market, but you should not just plunge in, because we have had a lot of gains like the latest 2 years. So just keep moving your money like once a month, so you spread the risks. And yeah, that's like the signals I can see on the market. It was also interesting to notice that one giant from back in time was having great earnings, IBM. I actually have a little position in IBM because I listened to the earnings calls of IBM, and I understood that the Red Hat business and their cloud segment are really improving the margins for the company, and they have already the big consulting kind of market. And sure, they won't like increase revenue very fast now because they are moving from more revenue to higher margins. So what we could see in the earnings was like the margins was improved, the earnings capability was improved. So IBM is a very interesting stock. It was up 12%, I think, after the earnings. So it will be very interesting if they can make a comeback among the big dogs. Obviously, Netflix also had a great earnings for was it 1 or 2 weeks ago. Also a very solid company that you should or could have some money in. They are really eating a lot of that entertainment market from Hollywood, and we can see more and more film studios wanting to collaborate with Netflix and their model where they pay their creators beforehand, even though the product from the creators, like a TV series or movie, will flop. They are still guaranteed like payment, which is making it maybe easier to be creative. And yeah, they are really gaining momentum based on how they are approaching the market in the entertainment space. So that's also a big stock that's interesting to follow. Before I end this video, I'm just going to talk about two of my biggest holdings that are having earnings next week, Spotify and AMD. It will be immensely interesting to follow the earnings of the two companies. I've listened more to Spotify than ever. They just announced like a big collaborations with like the artist industry again. So I see no problem with Spotify at all. Just the stock maybe have risen too much, so that might be very high expectations going into earnings. I wouldn't like go for options trading or something like that. You just relax and see what happens. I would just keep my position and enjoy the ride, so to speak. But AMD, the stock price has gone down a bit. It should, if they follow up on what they have said, they should have great earnings, but still I'm a little bit scared because it's such a big position. I really hope they will do good. We know the gaming segment of AMD has been slowing down lately, and they haven't announced yet the new graphic cards, etc. They are doing that in Mars, so we are like between where they're really gonna improve some parts of their businesses. It's same with the AI. 2025 is a big year. So I hope they really struck a lot of great deals. I know Oracle, Microsoft, etc. are big collaborations, even Meta. So I hope they can provide those new MI325 shipless and really take some shares from Nvidia and Black Whale because the world needs it, and we shareholders of AMD needs it. And I have AMD because the upside is so big, but I can't say that the stock price are gonna rise automatically after the next earnings. It might actually go down because I feel like some negativity about the stock that some people say, oh, Nvidia is too good, they're too big, they're eating everything. But I still believe in AMD, and I hope they will short term provide some great updates. Long term, I'm not at all afraid what's happening. I know they will provide great returns like 2027, 2028, but it would be nice to see some returns earlier also, to have more people piling in cash to buy AMD. That will make more people rich. So that's my take there. We will wait and see. And yeah, if you have anything, just write in the comments if you want me to bring up something else. And hopefully the information today provided to you was helpful. And it's always nice to speak to you guys about the marketplace and the investing space. And hopefully I will be back with another fun video to see. So the only thing I can say is thanks for your time, and bye bye.